Good evening. Good evening. We got some people filtering in. Welcome to the webinar, everybody. I'm going to give it another minute or two so we can let some of the attendees kind of get in here. Excited to chat with you guys about Winwood Club. We'll just give it another minute. If you guys can, I'm not sure if you guys are able to, but if you guys can, go ahead and type in the chat where you guys are from and where you guys are joining us from. Love to see where you guys are joining. And if you can, if not, no worries. Not sure how the technology will work on the webinar style, but if you can, that would be cool. Just give it another minute or two, let some people filter in here. Peter, excited to have you. John, Joey, Drew, welcome to the webinar, guys. Excited. Boston,
Nice.
Austin,
Represent.
Boston, Dharma Development, Austin, Texas. Fellow Texan. I love it. Okay. Good to see you. Good to see you too. And this is going to be a good one. We're going to try to be mindful of y'all's time tonight. Going to be thorough, but also not take up your entire evening. All right, we'll give it another minute or so. And I already know where you guys are from, Lucas and Ryan.
Right outside of Boston. Got to see if someone's on here is from Massachusetts.
That's right. Okay. Well, I say we jump in. Let's do it. Let's reward those that are here. Guys, first off, just welcome, again, good evening and welcome to the webinar. I see some familiar faces in here, and man, I'll just tell you, we are very, very excited to present to you guys our latest investment apartment offering, Winwood Club. And ultimately, guys, we're just grateful to be in a position to even be able to extend this kind of opportunity to you guys right before the year ends. One of the reasons why we're so excited about this deal is because this right here. Now, we have been sifting through deal after deal after deal all year long, and we have been extremely picky and very, very selective on the deals that we wanted to bring to our investor database. And the reason why is we just wanted to make sure that we're bringing you guys a home run. And with Winwood Club, we have absolutely found exactly that. We have said no a whole heck of a lot more than we have said yes. And, luckily and fortunately, we've been in a position where we have enough deal flow to be able to pick just the best of the best deals before just bringing you guys just any deal. We didn't want to just bring you guys any deal. We wanted to bring you guys a unique offering that would be, again, a home run for everybody involved, all the partners, the passive investors, the managing partners across the board. And, we have a very unique opportunity here. And the reason why we got this deal is we had a unique advantage. Okay. We actually have a direct relationship with the seller. We've known them for a long time. They've been investors in our community. And so we knew the seller directly, which gave us a huge competitive advantage over other operators for us to be able to win the deal, so what we're going to do here is we're going to run through the investment opportunity. But one thing I want you guys to know is that, here's the thing, spots are filling up quick. If you saw some of the emails and looked at the webinar or participated in the webinar that we've done before this. We've done a couple webinars up to this point. We're already over 60% subscribed for this offering. So really what we're looking for here, you guys, is just the last few investors to come in that want to partner with us on an incredible offering right to finish up the year. Okay. We've got a lot of momentum with this deal already. We've got momentum in the market too. I don't know how many we've got, but we own probably 10 or 11 other assets in Texas already. And for any of you that are here watching and know the market in the slightest bit, that the market has been on a roller coaster the last few years. Okay. And part of the reason why we're so excited is because we are finally on the right side of this market and buying this property at just the right time. Okay. Now it's not just me by myself here. Some of you guys know the rest of my team on the call, but we also have Ryan Toomey and Lucas Ravanis. And so again, guys, we are extremely excited to talk to you about Winwood Club. So what we're going to do is we're just going to go over some highlights of the deal. Again, we did some other webinars before this. We went through some, very in-depth, detailed knowledge on the deal. We're happy to send you guys out some recordings on that. So today what we're going to do is just talk to you, more about the highlights of the deal, why we like the property, why we're excited about it, give you a high level overview, and then what we'll do is some Q&A. And ultimately the goal is to make sure that you guys leave this webinar in a better spot than when you came. You have some more information, and you're more equipped to, make a decision and feel comfortable to move forward with this investment opportunity, with our team. Okay. But before we do that, okay, we can go to the next slide. Before we do that, full disclaimer. Okay, this presentation, as you guys know, this is for educational and informational purposes only. Guys, I'm not a tax professional or a lawyer, and this is not a direct solicitation. These are securities. You guys should read the investment documents in their entirety before you decide, and just to make sure that this aligns with your investing goals. Okay, so really just use this presentation as a way of evaluating a business relationship with us. Okay, so let's jump in. And again, not sure if I did mention this. For those that do not know, my name is Eric Chatterton. Again, one of the co-founders, managing partners of Axis Capital. We've got a lot of other team members, but it is Lucas, Ryan, and myself here to talk to you guys about this deal. But let's talk through some of the highlights really quick. Okay. Now, this deal, Winwood Club, this is truly an off-market property. And the reason why this is a key, important thing to bring up with you guys is because typically how this works, what we have to do is most of the time the brokers and the sellers, they'll have something called a call for offers date, meaning anybody that's interested in the deal is going to submit an offer by X date. Then there's a best and final round. Okay. And so the reason that we were able to get this deal the way we did is, again, it's truly off market. And the reason why that's a huge advantage for every one of you, along with our team, is because we didn't have to do the call for offers. We didn't have to do the best and final, because when you have to do those kind of things, what happens is buyers like us have to end up competing against each other, which drives the prices of the properties up. And that's when you start getting into bad deals or making emotional decisions versus logical decisions. Okay. And so because of our relationship with the seller, we were able to skip a lot of that and come in and really secure this deal for an incredible basis. Okay. So if you guys look at this up at the screen, we've got an 81 unit property. Okay. Property was built in 1985. The property is located northwest of San Antonio and directly west of Austin. Now, again, one of the things that makes this property or just this opportunity very unique is that our team, we have a ton of experience with 1980s vintage assets. Okay, tons of it. And the reason why we like 80s assets is because there's just a lot of upside for investors. There's a lot of upside for us. And the reason why we like it, again, is there's problems. There's problems that our team can come in and we can fix. And ultimately, what we can do is we can turn other people's problems into our profits. Okay. And so that's why we like the 80s vintage assets, and newer, especially in this Texas market. When you go 80s and newer, we're able to avoid certain types of things: piping issues, wiring issues, electrical issues, right? This is kind of like why we like 80s vintage assets newer. If you look at the purchase price, okay, we've got this property at $9,150,000. Again, part of the reason why we got the property at the purchase price that we are is because we knew the sellers, and because the sellers knew our team directly and they knew our ability to close. One of the things I'll tell you guys is very, very big in the marketplace today is something called shorty of close. Okay. There's been a lot of operators that have gotten properties under contract and then they cannot get the deal across the finish line. And what this does is it wastes the seller's time. It wastes the broker's time. And so for us, the sellers knew that our team can close. We are known as closers. Really, every single property that we've gotten under contract, we've gotten to the closing table. And that speaks volumes on our team's ability and our commitment to the deals that we end up pursuing, right? And so that's why we were able to get this deal awarded to us. Okay, now as far as the returns go, I'm not going to talk in depth on this right now. I'll let the other team members talk more about this, but just a high level overview. We've got a 17.8% average annual rate of return on the deal, which is incredible in this marketplace, especially with the higher interest rate market that we've been living in. Man, that is very competitive, very, very competitive. Okay, one of the things that you guys will love as investors watching right now, okay, you guys will love that the cash flow on this deal is very strong, right? Deals that we've had in the past, and a lot of other operators that have had in the past, especially with the higher interest rate market that we've been living in. It's actually tightened the cash flow substantially, which has impacted other operators' ability to pay distributions to investors. Okay. Again, one of the reasons why you guys will like this so much is because, again, the cash flow is very strong. If you guys see here, we're offering an 8% preferred return to investors. And for those that don't know what a preferred return is, okay, this just means that the investors on the deal, that means you guys get paid first. Okay, as you should. Okay, as you should. We wouldn't be able to buy this deal without you guys. Okay, we are true partners in the deal. And in my opinion, when all partners can benefit, that is the definition of a good partnership. Okay, now you guys will be paid your distributions in a combination of two ways. Okay, number one, cash flow throughout the hold. Okay, this is from all the collected rents from the tenants at the property. And then number two is equity once we sell or exit the property. Okay, so the cool thing about that is you as investors get to participate in the upside of the deal. Okay, so as we perform better, our investors make more money. Okay. So, and ultimately, what this will lead to is a 2.24x equity multiple on the deal, which is phenomenal. We are very, very excited about that and bringing investors a phenomenal investment opportunity like this one. Okay, now as far as the equity raise goes, if you guys look at this, we have a $6.1 million equity raise. So if you guys notice on the screen, you will see that the equity raise in comparison to the purchase price. And the reason why the equity raise is higher in comparison to the purchase price is because it is an 80s asset. It's a little bit of an older property. And so there's more money that we're going to put into the property itself, which is good for us because for us to get this property where we know it can perform, we're going to dump some money in, and that is what's going to lead to the, tremendous amount of equity upside on this deal. Okay. So again, ultimately, guys, that's a high level overview. I'm going to let the team kind of go into some more details, but remember, this property is already over 60% subscribed. Okay. So throughout this webinar, if you guys see this investment as something that aligns with what you're looking for, okay, then my advice would be to get into the investor portal and reserve your spot. Okay. So what I'll do is I'll have Lucas or Ryan go ahead and post in the chat a link to the investor portal right now. So that way you guys can go in there, reserve your spot whenever it feels right for you. And just also remember, guys, these deals are on a first come, first serve basis. So if you like the deal and hopefully if you like our team as well, then again, I'd get into the portal and make your soft commitment before spots do fill up. Okay. So again, whenever you guys feel like this aligns with what you and your family are looking to accomplish, especially considering this will be our last offering of 2025. Just so you guys know, we do plan on closing the deal before the year's end. Target close date right now is December 29th. That said, I do, believe that I'm not sure if we will really have available spots still by December 29th. We might, but investors are moving pretty quickly considering this is the last deal of the year. And investors are trying to take advantage of some year-end tax benefits. Okay, so keep that in mind as we go throughout the process on this webinar. But for now, I'm going to pass it over to Lucas. He'll give you guys a little breakdown on our team. So over to you, Lucas.
Yeah, thanks, Eric. And guys, if you can't tell by the way Eric's been talking about this offering so far, we're just beyond ecstatic to be presenting this opportunity to you guys today. And we're really just so pumped because we've been grinding for this deal, man. I mean, we've been trying to not just get a deal, but the deal. And we're so happy to finally be able to get this in front of you guys before we head into the new year. So, as Eric mentioned, I'm Lucas Ravanis. I'm the Director of Capital Formation here at Axis Capital. And throughout a lot of the conversations that I've had with investors, the common theme is always explaining that the biggest risk for any deal is the management team and the active operators. So I'm really excited about Winwood Club because we're combining forces with some industry experts that will really just help maximize this opportunity for you guys, the investors. Now, all of you guys know at least one of us, or even some of us so far, but I'd like to chat a little bit more about our operating team just for a few minutes. If you want to dive deeper into our team, then you can see a more detailed write-up starting on page 30 in our property packet, located under the documents section in the investor portal. But as per usual, feel free to reach out if you have any additional questions about us or the investment. Our contact information can be found later in this webinar or on page 41 in the property packet. Now, so for a high-level overview, there's two managing companies on this deal. It's Axis Capital and Falcon Capital Management. Everyone on here except Sharif, Depen, and Christy work within the umbrella of Axis Capital. So Tyler Devereaux, going left to right here. He is the founder and CEO of Peak Multifamily, which is the nation's leading multifamily education company, where he's actually helped mentorship clients acquire over $1 billion in multifamily assets. And he's also the co-founder of Access Capital, where he's acquired more than 600 million in assets and nearly 100 million in realized profits across 13 full cycle deals. Now, you guys have been hearing from Eric so far tonight. Eric Chatterton is our co-host, but he's also the co-founder of Access Capital. And his skills for leading top-performing national sales teams for over a decade has helped him build high-performing real estate portfolios, specializing in investor relations. But before merging with Access Capital, Eric and his team acquired more than 2,000 units across multiple states. And now with Access Capital's formation, there's even more manpower to execute these deals at an even higher level. Brett Davenport, he oversees acquisitions and he works very closely with myself, Eric, and Ryan for the investor relations team. Megan Davenport is our president of operations and she oversees the business operations and will play a big role in the asset management of the project. Ryan Toomey, who is the other co-host here, he's the director of investor relations, where his focus is to build long-lasting relationships with you, the investors, through communication and executing at a high level all the back-end operations within the Access umbrella. And again, I'm the director of capital formation at Access Capital, where my focus is really on educating and assisting investors in moving forward with passive investment opportunities under Access Capital. And then Lindsay Daniels has been in real estate space for over 20 years, and she's a huge asset to Megan's asset management team on active Access Capital projects. Now let's talk about Falcon Capital for a minute. Sharif Shakshir is so enthusiastic about project sourcing on multifamily projects. He has over 3,000 units, 26 acquisitions, and an average return of around 29% IRR across 10 full turn exits. And then, of course, there's Dipen Patel and Christy Oldham, who both bring an additional 20 plus years of experience. Dipen oversees $1.5 billion in multifamily assets across 6 states. And Christy will be the lead asset manager on the Winwood Club. She has over 20 years of experience in operations, and she sees a portfolio of more than 2,200 units currently. Now, all of this is to say, guys, we brought the Avengers together on this deal, right? The experience this team has is second to none. And this is a team of highly successful, highly motivated, and incredibly intelligent operators that are well positioned to maximize every dollar of this property to provide all the possible benefits to our investors. So again, operators, they will make or they will break a deal. And we feel incredibly encouraged with our management team, and we're super excited to partner alongside you guys on this opportunity.
All right, thanks,
Well
Lucas.
said.
Yeah, we have a group of all-stars here on the management side, and we just can't wait to take over this property and be able to provide these returns to you guys as investors. But I'm Ryan Toomey. I'm the director of investor relations for Axis, as Lucas just mentioned. I handle all the investor communication and the reporting, everything like that across the portfolio. In fact, I've probably been in communication with almost all of you on this call already. So I do want to thank you all for joining us live and taking some time out of your night. Now, to dive into the opportunity, the offering is available for accredited investors only. And with this is a minimum investment of $100,000 with that preferred return, like Eric mentioned, of 8% because the cash flow of the property is projected to be so high. So the funds will be due on December 27th for this deal, but it is a first come first basis, as mentioned earlier. But here's a quick snapshot of the projected return breakdown. And this diagram shows the breakdown for each $100,000 invested. Now, this will be a 5 to 7 year hold with cash flow returns of about 73,000 plus equity returns of about 50,000 and the initial investment of $100,000 back, giving you the investment value of $223,406 or a cumulative return of 123% on your investment for this. So returns will start accruing immediately upon closing, and the first distribution that will be planned after year 1, which we call our stabilization period. I'll dive into that in a little bit, and that way you can see what our process looks like. And if you've invested with us before, you already know this. We don't treat these projections lightly at all. Because here's the thing, anyone can make numbers look great in a spreadsheet, but there are many things that can change those initial projections as we hold these properties. And we're very aware of that. So that's why we stress test these deals long before these numbers ever show up on a slide or in front of you guys in a format like this. And when we do, they're conservative by design. So take cash flow, for example. This deal cash flows from day one. That's not the upside, that's the baseline. And the upside comes later as the business plan is executed, but we never rely on later to make that deal work today, which is why seeking out properties that will cash flow day one are always our primary target. Now, all of you know in the real world, things don't always go exactly as planned, which is why the asset in the market, no matter how good they are, should not be the only deciding factor. And I believe Lucas touched on this a little bit going over the management team, but deals don't succeed because they look good on paper, right? They succeed because of the operators and the management team behind them. Anyone
So
that loses
true.
focus, or even the great assets and great markets can underperform if you take your eye off the ball. But disciplined operators who stay engaged, adapt, and execute no matter what the market conditions are, those are the ones that find a way to win over time. And that's the lens that our team will be looking through. Now we've had some questions on the distribution structure already, so do want to dive into that. And this opportunity consists of two what we call hurdles. So as you can see here, and as we mentioned earlier, investors will benefit from an 8% preferred return, with 70% ownership going to you, the limited partners, or the Class A investors, and 30% to the managing members, which are shown as Class B. And once we hit the average return of 15% per year, anything in excess of that will then be split 50-50 between the Class A and the Class B members. Now, what this does is protect you as an investor while also incentivizing us to perform on your behalf. Because our team really starts hitting our returns when we perform, creating alignment, which makes this a perfect partnership, really. And one of the beautiful things about this property is the current seller has done little to no work when it comes to actually modernizing the asset, which leaves a ton of upside potential for us to take advantage of. And that's when this comes into play. So our asset management team is already in place, ready to take over the property. We have contractors out to the site, quotes have been given, and we're hitting the ground day one to execute our value add plan. And we break every takeover process into different phases. In this case, we have three. So phase one is to stabilize the property. That's in year one. So that means clear communication with residents, about new ownership, renovating vacant units, and just addressing any deferred maintenance right off the bat. And this way we fix any obvious issues before they compound into something bigger later. Phase two is to build off that momentum. So as leases continue to expire, we'll turn those units and modernize them, as well as set clear expectations, both internally with our management teams, as well as the residents that are on site. And this is where the consistency and operational discipline comes into play and really start to show up in the performance, which is then passed down to you guys as investors in the form of quarterly distributions from the cash flow we'll be bringing in. And then phase three is just to optimize based off what we've done in phases one and two. So we'll finish our capital improvements, such as improving curb appeal, covered parking, and just repositioning the interiors to stack up on the momentum from phase two. And we do this to maximize performance as we move towards our strategic exit in year 5 through 7. Now, as we complete all three phases, we will also incorporate small rent increases along the way on newly leased units in relation to where the market currently stands. And, I'll let Eric dive into that a little bit so you can see how we compare to our competitors in the market of Kerrville.
Right, that was awesome. Man, seriously, such a good breakdown. So thorough. Real quick, before I do jump into this slide, did want to give a quick shout out to a couple people. I think we had Shirley on here at one point. Looks like Shirley was able to get in there and reserve her spot for the deal. Also, I see Joey on here. Joey, congrats. It looks like you were able to get into the portal and reserve your spot as well. Man, we are excited to have you a part of this deal with us. And we are excited for the direction that we're going to be going on it. And so again, I'll have Ryan or Lucas post that link to the portal. For those that do, again, at any point throughout the webinar, if you do feel comfortable to jump in and go start making your reservation, we've already had a few people on this webinar get in there and be able to do that. Maybe one or two of them before, but yeah, excited regardless, excited to have you guys there. Now, as for this slide, man, I'm really excited to go through this one with you. This is actually one of my favorite, like, how do I say it, visual representations of why these deals are a home run. Okay. So for those that do not know, there's a term in our business called loss to lease. Okay. And what loss to lease is essentially It's how far below the market rates that we are. And the reason why this is one of our favorite metrics to track is because you can see it up on the screen. On our one bedrooms, Winwood Club is on the far left. Okay, we're the dark pillar, that dark column. So on the far left for our one bedrooms, okay, it looks like we are currently 275 to $300 below the market rates, below our competition on day one. And on our two bedrooms, we're 175 to $250 below our competition on day one. Okay, now part of the reason why this is a big deal is because, guys, in our underwriting, you guys will see, through our projections, we projected $100 rental increases, in that first year. But if you guys look, we could accomplish anywhere from 175 to $350 rent bumps. So why? Why do we undershoot it? Well, the reason why is because we want to make sure that we underpromise and overdeliver. I'll tell you guys, there are not a lot of things in this business that can increase confidence for operators like us and investors like you guys. There's not a lot of things that can increase confidence, like knowing that we can walk in and on day one instantly increase the rents by 175 to $350. And then also ultimately what we're conveying to the investors is $100 rental increases. So could we push the rents more? Sure. But again, we would rather underpromise and overdeliver. We'd rather tell you guys something here and then go hit this. And so again, this is one of my favorite visual representations. And the reason why it gives us so much confidence, and it should give you guys confidence too, is because literally on day one, okay, on day one, we know that we could come in and instantly increase the property, increase the units by, depending on the type of unit, between 175 and $350 on day one. But what we did is we projected you guys $100 rental increases, just barely over 100. So again, is one of my favorite metrics to look at when we're evaluating any deal is the loss to lease. And the reason why is because there's already proof in the pudding, right? The neighboring properties, our competition properties around us are already accomplishing where we want to get to within the first 12 months. And again, there's not a lot of things that can increase confidence like that. So just wanted to hit that point home with you guys on this slide, but that's all I got for you here.
Yeah, and I do want to give one more quick shout out before I dive into this slide too. So we had David, he's committed to made his commitment as well. Like we're looking forward to partnering with you and taking this by
Congrats,
the horns on
David.
day one, especially closing out the year with some momentum here and getting those tax advantages. But yeah, I mean, there's a ton of upside with this deal. One of them being the rent increases, but also the sellers just left a ton of meat on the bone when it comes to the value add play too. And we're going to take advantage of that right off the bat. But all these things are what drive our target returns, which you can see on the screen here. So from the takeover process to the rent increases and better management, those targets look like this. So we're expecting an annual cash on cash of about 10%, and that's the cash flow you're getting throughout the life of the hold. We're sending those out on a quarterly basis after year one once the property is stabilized. From there, an annualized return of about 17.8%. And that's a combination of the cash flow plus the equity growth we're going to have from boosting the NOI and just modernizing this asset. And over a 5 to 7 year hold, that comes out to about 123.41% cumulative return. And this is what that looks like on a year to year basis. So in year one, as I said, we'll be stabilizing the property. And as you can see, our cash flow is a little bit lower as we turn those units and utilize our CapEx budget to execute the value add strategy in the beginning. Now, keep in mind, though, any distributions that are under 8% preferred return do accrue and are paid out from future cash flows or when we exit the property. So you guys get paid first, right? And then in years 2 through 7, our cash flow will gradually increase as the property stabilizes and we wrap up those unit turns while preparing for our exit in year 5 through 7. So in those years 2 through 7, you could expect about $10,000 to $12,000 in cash flow, again distributed every quarter. But overall, on a $100,000 investment, you'll be getting about $73,000 in cash flow, $50,000 in equity when we exit, and that leads to that 123% overall return. Now, as we just mentioned, and I know some of you on this call have already made your commitments, and many of the ones that have came in are above that $100,000 mark. But you can kind of use this as a baseline to calculate what your expected dollar amounts will be when it comes to the cash flow and the equity based on what you have invested in the deal. Now, I know we've covered a lot of information in kind of a little time. We wanted to keep this concise, and as Eric mentioned, just be cognizant of the time. We have other webinars we've done, so if you need the further details, just log into that investor portal, which I believe Lucas put the link in the chat. But as you can tell, we're pumped about this deal. So let's take a quick look at what those next steps actually look like for you as an investor once you get to the portal. So first, I want to thank you all for giving us the chance to even show you this opportunity. Being able to make it live tonight, take some time out of your day. But first things first, if you haven't already, you're going to want to set up your investor portal. And this is where all your documents will be housed. The property info that will be stored there, your K1s, tax documents, performance will be tracked. And the thing that everyone wants, the distributions, those will be sent from the portal as well. So you definitely don't want to miss those things. And once you're logged in, we've made this as simple as possible for you as an investor. So step one is to review the property packet. And most of you have probably already done that, but if not, you'll be able to see the full breakdown of all the details we just covered, but in a way more extensive way. And then next, you want to complete your subscription by entering your desired amount, what we call a soft commit, and then moving to the last step, which is step three, signing your subscription documents and then wiring your funds. Now, the good news is this is all electronic. So at this point, it takes about 2 minutes to go in and sign those documents. And then once you're wired, congrats, you're a part owner in the Winwood Club, and our team will get to work to hit those returns that we mentioned earlier. And to cover those one last time before we wrap up. This is for the accredited investors only. There's a $100,000 minimum investment with that 8% preferred return. And the cash flow from the opportunity will provide 73 grand in cash flow on a $100,000 investment, $50,000 in equity, which leads us to that overall return of 123.41%. So again, I do want to thank all of you guys for joining us, and we're excited to have you all partner on this opportunity just in time to close out 2025, head into 2026 with some serious momentum. And you can access the investor portal with the links that Lucas put in the chat or the QR code here. But with the remaining time, I do want to open things up for a Q&A and pass this off to Lucas as questions start to come in. So you can get those by entering them in the chat or the Q&A function below. But anything you guys have as questions, feel free to shoot them out there and we'll get those answered for you right away.
Hey, Lucas, real quick before you take over, I just want to throw out there, yes, we do have you guys minimum investment of 100 grand. That said, I know a lot of you guys are looking, especially at this time of year, to invest to try to offset some of your tax liability. So if you have questions on what that looks like, best thing you could do is book a meeting with our team, with Lucas or Ryan or myself, and book a meeting and have us try to work with you to reverse engineer the right investment amount. Okay. Because some of you guys might have bigger tax burdens than others. And whatever the case may be, we want to walk you through the best possible situation for you. Again, we're not CPAs or accountants, but I know a lot of our investors are anxious and excited at this time of year to put their funds to work for themselves so they can try to minimize some of that tax burden as much as possible. So if that is you, book a meeting on a call. We're happy to give you guys some more clarity on that for sure.
Yeah, well said. I mean, we're more than happy to hop on any calls that you guys have, and you'll be able to find our contact information within the portal as well to get a Zoom call, schedule a one-on-one call, whatever works for you guys. Before I dive into the Q&A real quick, though, I do want to shout out to you, Pete. I saw during the webinar you were able to get your soft commitment amount, so excited for you, man. Happy to partner alongside with you on this one. And as you guys know, we've had some communication go out about this property for a couple of weeks now. And we've actually had a few questions that popped up on multiple times and different occasions through a couple of you guys. And we thought it'd actually be a really good idea to address these questions here. So one of those questions that popped up a lot actually was, how does the Winwood Club compare to other investment opportunities that we've looked at in terms of risk-adjusted returns? Eric, I think you know more about this, right?
Yeah, I can take that. Yeah, guys, we've done, we've got a lot of deals. We've got a lot of experience in different deals and different market cycles and all of that. I'll tell you a couple of the reasons why we are thoroughly excited about this one and make it unique, and give us a little bit more of an advantage compared to other operators in other deals in other markets at the exact same time. Okay, the first one is because the debt, as you guys know, starting back in 2022, a lot of people started getting properties with bridge loans and floating rate debt, variable rates. We had a couple of those ourselves that we fought through some challenges on, right? Which is why we're so bullish and very, very particular on making sure that we get the right debt product for our investors moving forward, right? And so we have secured a debt rate. We've got a debt product at 5.57%. that we're locking in there. And we also have 36 months of interest only. And this is just going to put us in a phenomenal position to just go perform at a high level and really get this property in the first 3 years, where it needs to be to perform and just maximize our investor cash flow at the highest possible level. Okay. So that's number one is the debt. That is probably one of the biggest risk factors amongst most deals in the marketplace today is people are not securing the right kind of debt. And so we made sure that we did that. Okay. We made sure that we did that. The second factor is our debt service coverage ratio. Okay. Here, if for those that don't know, typically what the banks are targeting is a 1.25 debt service coverage ratio. This is essentially, our ability to pay the bank back on a monthly, quarterly, annual basis, right? And so, what we usually target is a 1.4 debt service coverage ratio going in. And the reason why is we want there to be a little delta there that'll protect us, in the event of any sort of rainy day. Okay. So, we've even acquired properties in the past where we had just barely over a 1.0 debt service coverage ratio with the expectation that we were going to implement some value adds in those first 3 to 9 months that were going to increase the cash flow to make it a little bit more favorable. Okay. We've done those kind of deals before. That is not what this deal is. That is not at all what this deal is. This deal, this is why we're excited. This is what makes it unique. This is what makes this, in our opinion, not just a home run, but a grand slam, is we're going in with a debt service coverage ratio of just barely over 2. Okay. Which means we're like our collected rents at the property, our occupancy going in is already at what, you guys? It's like 97%.
Yeah, 97.
97%. So guys, the property is going to be literally cash flowing from day one, and we're just in a great position. This means really essentially for every $1 going out of the business, we've got $2 coming back in. Okay. We should be able to double the payment that we need to the bank. And that alone, you guys, I'm dead serious. That alone should give every single one of you so much confidence going in that we're going to be able to not only one, pay the bank, but number two, be able to pay our investors. And for us, that is right there at the very top of the list is making sure that we get our investors cash flow distributions, money back in your pocket. Because once we do that, we know what that's going to lead to. That's going to lead to a happy investor and probably either some referrals or you guys wanting to reinvest with us again. So for those two reasons, okay, because the debt product and because our debt service coverage ratio is so high, that's why I believe that we have a unique advantage and that this property will not only meet but exceed expectations at the highest level.
Yeah, man. I mean, I actually couldn't agree any more to that. I think it's awesome you touch on those two because, again, we mentioned this a couple of times. We don't want a deal, we want the deal. And I think the 36 months interest only plus a 2.0 DSCR really puts us in a position to execute right out the gate, which you can't say with every single opportunity these days.
For
Um,
sure.
yeah. Another question that we want to talk about is can you walk through how today's entry basis creates a margin of safety for investors?
That's a good one.
Yeah, I can take that one. I've talked a lot with Brett, who's on the acquisition side, about cost basis and things like that within the market. So obviously the purchase price drives the rest of the returns, right? And we're coming into this deal at a $9.15 million purchase price or about $112,000 per door. So for reference, the surrounding submarkets, those are about $145,000 per unit. So we're well below that coming in at a great cost basis. But the reason we're able to lock it up at such a good price, and I believe Eric might have touched on this briefly in the beginning of the webinar, was because of the acquisitions process as a whole. Now, typically when we submit these offers on a property, like he said, we're competing with other groups, and inevitably that drives the price up, right? But because of our relationship with the seller, we get access to this deal before that part of the process began. So we were able to avoid that altogether. And that makes it actually a true off-market deal. And those just tend to produce the best returns because of that lower cost basis. So there's a kind of a built-in margin for safety there. And I think we're able to achieve those returns for that reason, especially that DSCR number that Eric talked about. That definitely reflects that. So that's a major metric that we're tracking on these deals as well.
Yeah, couldn't agree more, man. And then I think a big one too that we want to touch on is what levers do you control as operators that can improve performance even when the market softens? Actually, I think I want to take this one, guys. You cool with that?
Yeah, yeah, go for it, Lucas.
Yeah, no, I love this question so much. This really comes down to just operational excellence, right? Operators are everything in this deal. in any deal. And I think the big thing is just the nature of the deal. Where in this commercial real estate sector, we're doing everything off of the net operating income compared to, residential real estate, which is based off of comparables. So even if the market softens, if we can purchase a property and our job is to increase income and decrease expenses. Through doing that, whether the market is high or low, we're still able to increase the value of the property, which means when we offload it, it will still be more valuable than when we purchased it. So just the nature of how we go about this is really pivoting against any of that risk. But besides increasing rent and lowering expenses, what we're doing is we're modernizing units to get a fresher tenant base, and we're marketing towards the hospital that's actually only a block away. That hospital that's about a block away, that services the surrounding 75 miles in the area. And the property is already 97% occupied, and it has been for years. So what we're going to do is just work on creating a more affluent tenant base moving forward, and that's definitely going to help. And then besides, the NOI and the new tenant base, I think really what we want to focus on too is the other value add opportunities. Besides just the money that we're putting into modernizing these units, we're going to be having preferred parking. We're going to put in covered parking. There's going to be washer and dryer expenses as well. And all of those feed into the bottom line and help us increase the income for the property. So all that is to say, we have a lot of things that we can control, whether it's market dependent or not, and that helps us really mitigate all the risk for the investors. So that really fires us up, and another huge reason why we definitely want to execute this property with you guys in end of 2025 here. So those are all of the questions that we wanted to make sure that we answered at this webinar. But for the remaining time, I'd love to open it up to you guys. Do you guys have any questions that you want to run by Eric, myself, or Ryan? Anything that you want to make sure that you get answered tonight to make you more comfortable with this decision? Feel free to type them in the chat or raise your hand, and make sure we can get that squared away right now.
Looks like Joey asked, "Are we in a flood zone?" Timmy, do you know that we're not, but we're
No,
Actually,
yeah.
yeah, so I'd love to talk on that. So we're
sure.
right outside of flood zone, which is great. We're not in the flood zone, but what's actually really great about this property is we're at the very top of the elevation in the city. So there was a flood about 6 years ago where the surrounding properties were
Bad one.
impacted, and we were not. This property did not get touched up by it because it's right at the top of a hill countryside. So the location of this area is actually incredibly sexy for us as investors to make sure that we can mitigate that right out the gates.
It also
Joey,
helps on the insurance side as well. We weren't hit by those drastic
yep.
insurance increases at this location, because we are right outside that flood zone. So that's actually one of the things we take into account well before we'd even jump to submitting offers on this type of deal. So
Yeah, and those are the type of risk factors you got to look in when you're investing in Texas is the flood zones. And this is definitely something that sparked some interest when we realized the true location of the property.
Yeah, Joey, super glad that you asked that one. Very, very intuitive question. Especially with, you being where you are. But I mean, ultimately, we've got properties out in Houston, we've got properties in Victoria, we own properties in San Antonio. And so because of all of that, we have a very good grip on what the insurance market looks like. And guys, we're the type where right now we'd rather be conservative on our income and aggressive on our expenses. And so, we just know what the insurance looks like. And we've been in spots before where, insurance is tightened up on us because rates went up. And so going into this deal, we're extremely, again, aggressive on the projection side, but that's why we're coming in. Again, we'd rather project you guys insurance up here and then have it come down up here or down here. So great question. Love that you asked that. Any others, you guys? Okay.
yeah, well,
That
if
just
not,
means that we did a really good job.
I hope so. And then what I would say too is I'll put my an email in the chat. So it's for our support, but it's really just me directly. So feel free to reach out to me with any questions you have. It's all the investor relations stuff will be done there. So feel free to use that email, ask any questions that might come up from now until you guys submit your commitments, or if you're working through the portal. I know I've had some questions from some of you on this call that were about investing with your IRAs, and we've had to go through a process to set that up as well. Happy to walk you through that if you're new to that too. Just a little bit of extra work, but we can handle that. It should be seamless. So let us know if you have any questions in the meantime.
Yeah, if we do we have one more or no? Okay, no, that's just the sport. Okay. Guys, as again, that is as sincere as I can say is thank you all for making it this far. We went for about 45 minutes. I know we had a couple people pop on late, but thank you guys for making it with us. And, as we went through the investment, as you guys know, we're incredibly excited about the deal and we're excited for, our potential partnership with you and, grateful for the opportunity to align on this incredible investment opportunity. Ultimately, guys, we don't have too much more for you. If you do have additional questions, reach out. But last thing I just want to say is happy holidays to every single one of you guys on this call. Hope you guys get to enjoy Christmas with your families. And, if you're not, then shoot me a text and I'll FaceTime you and make sure that you at least get a smile in. So appreciate y'all. Appreciate your time. Have a great night. And we'll see you guys in the investor portal and as partners on this deal. Okay. See you guys later. Bye.
You guys, thank you.